Good morning, traders. Hope you're all doing well this fine Wednesday, hump day as some people like to call it. Morning to Stelios and Kay. I'm going to go the other way around because he moaned yesterday. Morning, guys.
Morning.
Well, morning.
I was waiting
you got
for
your name
Stelios
first,
to
mate.
reply first.
You said me first, didn't you? Well done.
Yes.
Yeah. And you can go last when I say goodbye. Right, well, today is the big day as far as Cintra is concerned. We're at the big panel meeting between all the big wigs, ECB, Fed, BOE, BOJ, and anyone else they want to drag in off the streets. So that's going to be the big one. That starts at 12:30 GMT. So look up your own clocks as to when that is in your time zone. But that's the big Cintra Powell coming up. And we'll see if we get something spicy from UEDA. Kuroda took one of these types of events to drop a bombshell many years ago. Maybe UEDA is going to do the same, but we shall see if he turns up. If he's not there, as Kay said earlier this week, maybe something is cooking. Gav says, which one of them are we listening to? None of them. Oh, you know what you're going to get. It's all going to be the same old waffle. But maybe we will get some market moving bombs dropped. Who knows? We can but hope. Anyway, we can talk about that shortly.
Brian,
yeah, go on, mate.
You're an hour early. I think it's 1:30 GMT. The stuff, but that's a detail.
Oh, is it? I'm looking.
I think Portugal runs on the same time as we are.
The what?
Portugal runs on the same time as we are.
Oh no, it's my fault because GMT
is
BST, isn't it, at the moment?
I posted the link in the chat room.
Yeah. No, you're right, mate. I'm getting my clocks confused. So anyway,
no problem.
You can all look at your calendars instead. Anyway, let's crack on. The PBOC fixed the reference rate 3 pips higher than yesterday. Now, obviously, we did get a little bit of a pullback yesterday on the selling. Not that you'd know it now because we've now made fresh highs, but they still kept that reference rate around about that 721 area. So the market putting the selling that Chinese state banks did to the test, as I say, we're now moving up into the 125s, 725s. So now for me, we're going to have eyes up on the top here, around about 727s, 28s, which was a bit of a support resistance point on the first move up to those 730s highs, and then after we came back down became a resistance point again. So that's my next level in terms of this, and maybe we get a look up here. If we do break above here, I'm going to expect the language to maybe get a bit more stronger, maybe a bit more action, but we get to see if they are slowing the move rather than putting a halt to it altogether. So we need to keep our eyes on that. As mentioned yesterday, I did get out a good chunk, most of my longs. I've just got a piece on for interest to see where it goes, and off it goes again. What are you doing with this one, Kay? You still riding some?
Yeah. And I've been saying in the room, I said, I think today we're trading value date end of month, right? So we could see a bit of US corporate dollar shopping going on. And I think I'm going to use that opportunity to, if not all, take most of the rest off. If that's the side of the dollar this afternoon at around 4 p.m. We're in an interesting zone. I'd already take it off now, really, because in this 725.5 to 727, there's a bit going on. Yeah, I'm going to just wait for the clock and see what we can do. I'm planning of taking some up because my main idea also is that towards the month end, quarter end, we may see a bit of dollar selling. That's one thing. And if we had one warning shot, why not another one? You know, in the next couple of days, and rather than sitting and looking it go down again, possibly, it's perhaps time to realize some of the profits and move on to the next one, or find an opportunity to get back on board, perhaps in towards the end of the week. So that's roughly my plan right now.
Yeah, good stuff, mate. Good stuff. Yeah, I'm not overly keen on a dip buy right now because of the risk of them stepping in. But I think you could be right. If you get a decent enough dip and it looks like fix action, that might be a little dip to grab onto. And yeah, I'm not sure about whether holding it that portion over the weekend and waking up to some shenanigans Monday morning, Sunday night. So yeah, we'll keep an eye on that one anyway. Right, moving on. Japan's Kanda and Suzuki have been out with their daily waffle on what's going on in FX. No real change to the language there. The usual stuff, so nothing to note there. We shall move on. There's a ton of eyeballs coming in looking at 145 as an intervention level, 145 up to 150. That's a quote you can wide enough to drive a bus through. So we are getting up towards that 145 level. We could probably see some natural selling, heavy selling into that level, because if everyone thinks it's intervention level, we might get a few front runners stepping in. So it might do the work for them. So I wouldn't be surprised if we get up near that 145, maybe around the 144.80s, 90s, and we see it get a big slap down from there, just on people jumping in and front running. But yeah, we're getting up to everyone's watch point, and if people do get short there and they don't step in, then there could be some pain coming for those shorts. But we'll see what the Bank of Japan says, those members, and we'll see what the MOF says about that if we get there. Over in Australia, and we got some data out overnight, CPI data. Let's see if I'm on the right page. Nope. Let's go to there. CPI pulling back more than expected, year on year, falling to 5.6%, was forecast at 6.1 from a prior 6.8%. So that put a little bit of a fire under the Aussie longs, and they got a bit creamed. Aussie dipping on those numbers there takes a bit of heat out of rate expectations too for the RBA, which I believe is next week. If I'm not mistaken. I'm sure someone will tell me if I am. Italy, they're kicking up a bit of a stink over there, or minor stink. Italy leader Meloni says that ECB monetary policy risks doing more harm than good. And the deputy premier said ECB risks triggering a recession. So a bit of political guff going on over there. I spoke to our resident Italian in our chat room, who says it's pretty much a load of bluster. Executive board member Panetta, though, has been put forward, or it will be taken over from Visco as the head of the Bank of Italy. So a bit of a change there. He is an executive board member, but now he's going to go into the Bank of Italy, which obviously keeps him, or puts him on the governing council from there on in. It's been floodgates from ECB bods today as well, all running around Cintra, speaking to whoever sticks a mic in their mushes. ECB's Vastley, core inflation is getting stronger and stronger. If inflation is more persistent, more rate hiking is needed. ECB's Wunsch says rate pause needs a clear signal the core is slowing. ECB's De Guindos, more ground to be covered on rates. July is set. September will depend on the data. Archdove Centino says inflation is easing as quickly as it went up, and we're definitely getting to a terminal rate. Wojcik says there's good chance of a September rate hike. Inflation persistence means there may not be a September pause. Vashley says need convincing that a rate hike beyond July is not needed, not that it is needed. So very hawkish rhetoric from those guys, even potentially now setting up for a move after September from some of them. And that's the rhetoric they're going to keep pushing, even if the data doesn't comply to say that they need to keep hiking. They need to keep this message going. But there is an increasing chance now we do get a move through September, because Reuters was out with a sources piece saying that ECB policymakers see little chance of a pause in rate hikes in July or September on stubborn inflation. Now, there were also some other reports that ECB bods might weigh a faster reduction of the bond portfolio, i.e. ramping up QT. Over to the Bank of England, and now there's a 20% chance of a 6.5% peak, according to some market players who are trading it that way. So we've got another little step up in rate expectations there, 6.5%. For me, that's very, very toppy. I think 6.25 is very toppy, but 6.5, that's even toppier. If we see the pound moving on that, and it doesn't seem to be doing so at the moment, cable's pretty steady, euro sterling's a bit higher. But if the pound starts rising on those expectations, I think we're getting into a scenario where looking at shorts in the quid is going to be maybe the better trade, because I think those are getting into far too excessive rate calls now, 6.5%. But anyway, as for the US, a recession is coming this year, warns HSBC, with Europe to follow in 2024. Goldie's CEO says the US might not have a recession, but it could also have a period with 0 to 1% growth and 4% inflation. That's echoing what we've been saying on the show for a while now. Global growth in general probably going to be somewhere between sort of minus 1% and plus 1% all through the year. So nothing going hugely strong, but nothing really weak either. A bit of flatlining. Those recession calls may have to wait a bit longer. US durable goods came in positive. Headline number up 1.7% versus minus 0.8% expected there in the durables. If I can find it, there we go. So headline number there. The all-important measure, capital goods orders, also a decent positive 0.6% there. Obviously, you've got to look at stripping out some of the big orders, like that one there, non-defense and that sort of stuff, also positive. So some good data again for the US. That was backed up by the consumer confidence number, which absolutely took off. Was expected a mild lift to 104, came in at 109.7. Very much soft landing numbers there. 1 year CPI dropped a pip to 6% from 6.1%. Current conditions, expectation measures both higher as well. New home sales, again, another beat of expectations, 763k versus 675k prior. So again, more soft landing data for that. House prices, though, did dip a bit on last month and were down on the year as well. But again, nothing that waves any red flags. Canada, as you can see there, CPI coming in lower than expected. Some big drops expected there. CPI year on year was expected at 3.4%, came in there. On other measures, there were drops more than expected, some not as much as expected. These are the 8 different ways I try to count it. But overall, CPI coming in lower. So that, again, has taken some heat out of rate expectations for the BOC, not by much. Rate probabilities were running at around 62% from 64% after that data in some metrics. So not too much washing out of rate expectations for the next BOC. Anyone got any thing you want to chuck in, fellas? That's me with the headlines.
Not all at once. No, no, I don't. Credit Suisse, you heard about that, right? Credit Suisse, more than half of them are getting laid off, which is tough. They have what is it, 50,000 people they employ, so half of that. Yeah. In other news, employment doing great everywhere. Yeah,
well, we had that forward stuff as well yesterday, so something we need to keep an eye on. I assume that's everyone's, that's globally, isn't it?
Yeah.
So I wonder how many of them are going to get rolled into UBS and whatnot, and all the others, probably not a lot. Such is life. Anything else, guys?
I saw some article about some guys. Perhaps you talked about it. I was just busy on something else, but some people around the ECB seemingly talking about accelerating the runoff of the balance sheet. That should tighten the financial conditions without having to move the rates. Well, something we just have to bear in mind. It's not that the market has really been trading QT left, right, and center. Could be somewhere on the line, but if you look at equity markets, they're for sure not trading QT right now. No, that's about it, mate. I think you covered everything.
Cool. I wanted to ask you how we're looking on the month-end stuff. Is it going to the models plan? Are we seeing a bit of dollar weakness, or is it another wet in the air?
Today is the odd one out, right? We're trading value data end of month, so we may have some US corporate dollar shopping to do today, but then from let's say the 4 p.m. fixing, yeah, majorly it should be to the weaker side of the dollar for the end of the month quarter. But then those calls about having to buy euros, if I look at where we are year to date on just comparing DAX and S&P, they mostly ran parallel at various speeds, but they have done roughly the same trajectory since the start of the year. So I don't know for the longer term, the quarter end, half year end, whether there is going to be a lot to do. That for the dollar. In my opinion, there should be sterling buyers for the end of the month, but we need to get our timing right for that one. For the time being, still very much the European mornings have been very much euro crosses buyers. We've seen that since the start of the week. I don't know for how long they are going to go on, but we could have a scenario where we have like flows in one direction in the mornings, and then a different picture going into the afternoon when the real 4 p.m. Hedge funds, asset managers, supras, you name it, sovereigns need to do their shopping. So yeah, but the main theme should be for a weaker dollar towards the end of the week. That's the theme.
Yeah, it doesn't seem like we're getting much in the way of moves around the hourlies and whatnot. Nothing that really stands out.
Well, I mean, we have to note that euro crosses are higher, right? Once possible news is out of the way, all the euro crosses are higher, barring the exception, you know, like the MEX, for instance, but that's a different stuff. I think the euro MEX is not perhaps driven by euro, but rather like MEX yen and stuff like that, and just Mexican peso being so strong versus everything. Yeah,
agree, mate. Right, Mike, do you believe cable is still a buy and a dip under 127? It's looking that way at the moment. Yeah, sorry, mate.
Define dip.
Yeah, that's the thing. At the moment, the dip is hard to come by. I mean, this is probably the quietest cable's been for some time. You know, take out that blip last week. You know, we're sitting in very tight ranges at the moment. So for me, it depends on what you're trading it on, Mike. On the fundamentals, is it a dip buy? I don't know. I think 126 is more your level. If you're trading off a 127, you probably want to keep it fairly tight. You know, under 126.80, things are looking a bit hairier. It depends what you want to do, mate. On the fundamentals, I'm not too keen on buying the quid up here. Most definitely, especially not against the dollar, considering what the data's done the last day or so, which has again really been soft landing stuff. But even then, we've not seen the dollar gain that significantly. What is possible is that this may be being held up by what's going on in other pairs, like euro sterling and particularly guppy. I'm going to have to keep putting these fibs up again. It seems like a daily thing. That's what Durej is asking as well. Can you look at guppy as in stuck with some short positions? Well, my first question to you, mate, is what is your plan? What was your plan at the start? Let us know in the comments, because the only way to us to give you any sort of analysis on what you're doing is to know what was in your head at the time. So let us know, are you stuck offside because you haven't got a stop in, or have you got a stop that's not in or getting hit yet? So give us a bit of insight, please, as to what your thinking is there. But technically, yeah, as I say, if you want to trade the 127, you can see, you know, we, for the best part of nearly a week now, we can't get through it. If you want to trade off 127, be my guest, but know where you're wrong. You don't have to give it a lot of room. Through, as I say, 2680, you're probably wrong, and we're probably heading a bit lower, maybe down to 126. So yeah, there's your trading 03 now, Mike. So if you're looking at it, don't miss it. But all yours. I'm not doing an awful lot at the moment because not a lot's happening in the main pairs I'm looking at. Euro sterling, as said, we're getting up into the 86s again. Can we get up to the recent highs around 86.35s? Can we test this 86.45 area? Can we push on up here? It definitely looks like it's getting bought on dips, which again shows you that the pound isn't as in favour as it was a couple of weeks ago. So that gives you some caution if you want to be long the quid. Maybe you need to wait, have some patience, wait for some really better levels where that can be put to the test. Aussie dollar, as mentioned, got a bit of a slap over the data, and it's not really looking like it's recovering much at the moment. Bit of a weak bounce we're looking. Got down to this funny 66.20 area again, which is just a bit of a short-term level that if we haven't been there for a while and we come there, that tends to show up. Another level under that into the 66s. You know, again, this one doesn't know which way it wants to go. It doesn't know where it wants to go back up, doesn't know where it wants to go back down again. So this continued longer-term sideways action is still in play. And until we get something that really breaks above 68, or we get below sort of 64, 65 and a half, 64s, that sort of, those sort of areas, it's more sideways action from here, and that's what we're going to have to put up with for a while, I think, while the fundamentals decide what they're going to do, and thus the central banks as well. What do you think for the RBA next week then? Do you think they're going to pause or hike, or is it they're going to sit there with a coin like the rest of us? Still, do you want to take that one?
Sorry, say that again.
RBA next week. Do you think they're on pause? They're going to go again, or it's a coin toss?
Yeah, that's a good question. I think most central banks, apart from Bank of England, are going to be more inclined to go on a pause earlier, or should I say, like Steve says, later rather than sooner. Sorry, sooner rather than later. Yeah, no, I think the trend, given that the trend for inflation is lower, apart from the UK again, which is a lot more sticky. I think because of that, central banks are going to have an easier time pausing or skipping, or however they want to call it. And let's face it, they're going to be led by the Fed, more or less. And the Fed has skipped and might actually be pausing. So what do I think they're going to do? I mean, it's difficult to say, but I think chances of them pausing are rising, you know, with every day that passes, in my opinion, because we're not seeing inflation going higher. We're not seeing economic data, you know, going ballistic or anything. If anything, we are gradually going towards what looks like to be a kind of a global recession, slowly, even though, you know, I don't know if you read the JP Morgan chief economist was saying yesterday, oh, I don't think we're going to see a recession in the US, and also I think inflation is going to stay sticky. I probably disagree with both. So yeah, so my view is central banks, including the RBA, are going to err on the side of caution wherever they can. So yeah.
Well, we're probabilities is showing a 70% chance of leaving rates unchanged, and the 30% is for a hike of 25 pips. So the market is definitely leaning towards a pause from those guys. But who knows? They pause once, they might pause again, and then hike again. To me, that would be really bonkers if we're doing monetary policy month to month based on the data points. That's micromanaging to a very extreme level. But I'm not a central banker, so whatever. Kate, you want to take? Right, we're back. Dereja said got into it 181.50 short, thinking enough on this is Guppy. Kay, you've got better techs on Guppy than me.
Sure,
that
mate.
182 was really the cruncher level, wasn't it?
First of all about the RBA, we do have the manufacturing PMI out on Monday just before their meeting, and my opinion is now that central bankers, and they've all told us really, and we said it already many times, they don't know what they are going to do until the day before, because they are data dependent. So I think it's still an open question about what RBA may do. But that deceleration in inflation was pretty sharp overnight. So I reckon that there's enough there for them to perhaps pause and show that inflation and saying that they may be on a pause again. Aussie has been moving, right, on every data point, on every decision that we got out. Yes, we are back to where we were, and you could argue that we are in a big range, but we had the top side was really rejected, but the move just before was very impulsive on the RBA, on the latest move in data as well. And then yesterday there was a bit of a shock article out about failures in Australia, which were at record levels for the past, what is it, 15, 20 years or so. I forgot about it, but a bit of a shocker there. And Aussie is really responding to a lot right now. So it's there's two sides to this. It's a bit of a dangerous one to trade, but on the other side, it responds to factors. Also, it partially responds to the weaker CNH, probably because the market is still in that correlation with China, although the correlation should be a little less. That's what we saw during the month of June, where the CNH was already weakening, but the Aussie ran up pretty sharply. But it's an interesting one, the Aussie, I think, because it's a real mover, and it is one that I'm keeping my eye on for, let's say, shorter term moves, whether it's intraday or over 1 or 2 days. It's an interesting one right now. But then back to the RBA, I think it's really an open question, honestly, an open question. And as I've been saying, I think most of the central banks won't know what to vote for until the day before they're actually sitting down and thinking about what they need to do.
Yeah, and just before I hand the baton over to you, I want to give a bit of tough love here to Derej. You were short 181.50. It keeps going. You've removed your stop and you're waiting for the BOJ. Okay, you're not trading. You're hoping at this point. If you had a plan and you had a stop, you should have stuck to the stop. It was pretty clear that 182 was a key level for a break. The Bank of Japan could intervene in the next 5 minutes and you get in the money, or they don't intervene until this gets to 190. Are you going to sit in it till 190 and maybe they intervene and it drops back to 185 and you're still offside? You need to have your plan in place. If you're wrong, if you're feeling like it's wrong, get out the trade. Okay, start again, go back to the drawing board. But I wouldn't tell anyone to remove a stop if you had one in play and then hope that the Bank of Japan come to your rescue. That's not trading, mate. So yeah, it may sound a bit of tough love, but I think it might be needed in this case. You know, if you want to do something, at least put another stop in. You've got the highs in at the moment around this 183.60s. So you've got a bit of a confirmed high, even if it's just a few hours old. Do something like stick a stop above that. So you know if that goes, the trade's done. You can then get back on your horse and work to get it back via other trades. But if you're not sitting with a stop in, mate, this could be up 185. And then what you're going to do? Then going to put another stop in higher up. So I don't want to come down too hard on you, but sometimes, you know, traders need a bit of a shaking round the collar to wake up and get back on it, so you don't lose too much money. Kay, as I said, you got the text in play, mate. Do you want to grab it?
Sure, mate. I'm gonna go around the stuff a little bit. I can just concur with what you say. Hope is not a trading strategy, and discipline saves accounts. That's the only thing I can say about it. Here we go. First one is the differentials. They've been going up and down lately between the euro and the dollar, but now they're coming off a little bit. But euro remains sticky. I think it's a case of end of month, end of quarter stuff in euro crosses that is actually holding the euro dollar up versus all the rest. If you look at the rest of the dollars, they've been on a comeback since yesterday, the day before, really, and actually supported by sorry, data. So I'm not sure for how long this euro dollar is going to hold up, but we are possibly, even though it looks a little bit like the Hunchback of Notre Dame, we are possibly still doing this. But again, I would caution against having any long or medium term view in this for as long as we are in end of month, end of quarter, end of semi-year. Also, as Anne was rightly reminding us, we are at the end of fiscal year in Australia. So we could see some really funky moves on the Aussie dollar as well. But anyway, this is still looking to be a possibility. Again, I'm going to repeat, we are value date end of month, and there could be a bit of dollar shopping, so I would not be surprised if this ends up around 4 p.m. back a bit below. Do we have any? We don't really have market moving numbers. We do have that central bank Powell this afternoon. So that could be a bit of a mover, but all things equal, if everything remains as it should, we keep an eye on what's happening to the euro just around noon time or so, noon 1 p.m. here. It could be that we test a little bit lower. Anyway, I mean, I've entered just a small. I'm not going to fight it if it goes above 109.80 or so. I've already bought some back, so it's free trade, whatever happens, but I'm looking at this perhaps trading a little bit lower this afternoon before end of the month, perhaps doing the other way around. Cable 126.80 still there. We are on the approach again. Same thing. I think it's more about watching the clock. Get a bit of Bailey in there as well. Perhaps the market is already saying when Bailey talks, sterling is getting hit. That's a possibility too. But at least it's looking a little weak. I think it also has to do partially with those end of month, end of quarter trades in Europe, where the euro crosses have been very big this week so far. And at a piece of those the value day trading, it is a real possibility that we are going to go lower. And then it's all about timing, where we are at 4 p.m. It doesn't really translate in the models that I've seen so far from banks, and I don't pretend to have the truth either. But it does feel to me that sterling should actually rather be both towards Friday. But I'm taking a bit of a risk here. Anyway, let's see where it is at 4 p.m. It could go as far as 126. Why not? We never know how big fixings are. If we start to move back above 127.60, I think then the picture changes somewhat. Euro sterling, we're in the zone. We're in the zone 25.35, right? If that caps, then nothing changes, and then we're going to trade ranges for a bit. I don't really have an opinion here, but if you want to test the waters, we have a little double top here. But if it goes through 86.60, it could mean that the party is over for the sterling. Yes, Rohit, I will look at CAD yen as well. So that's one thing here. So we are in a relatively shorter term important zone, and then look at this 86.60. If that goes, then we should in theory be on our way to 87. But for as long as we hold here below, I think there's still a fair chance to see that trade a little lower. Sterling yen. We were looking to me already. The 180.5 was already a big level, and we shot through due to yen weakness. 182.40, 35.40 was the next level, which was an extension level, was also a target for a couple of harmonic patterns that people in our room were showing. And we are with this yen weakness that we're seeing, we are just moving through. I don't have a firm opinion on that right now, but hoping for interventions is a very, very dangerous strategy. As a matter of fact, my very long-term view hasn't changed. I think yen is going down the pan over multi-years view, but in the meantime, a lot can happen. BOJ can do something. As I said in the room, Ueda has perhaps a chance to do some sort of Kuroda in 2016 reverse, when Kuroda said that they were going to ease and going to negative or do YCC and buy as many bonds as the market would like to sell, which sent the yen crapping out. He has the opportunity now to in Cintra to do a bit of a reverse Davos, but the way he has been communicating, I cannot say it's going to be my base case. So for now, because the Bank of Japan meeting is a month away, unless we got an emergency meeting in between, which is very, very rare. But for now, the only thing that can save the yen, in my opinion, and it's going to be short term, is the MOF. For as long as the MOF doesn't intervene, I don't see any fundamental reason to be short yen, to be long yen. Sorry. What could happen, and we were talking about that as well in the room. What could happen if they intervene? Because if we look at the crosses, they're really very, very big. I think in current context, take away all those end of month and end of quarter fixings. What's going to happen there? Because we could see naturally a little bit of a setback in the dollar. But if we look where the levels are now, or 144 in dollar yen, if they would intervene, I think all else equal, they are going to have a very, very hard time to keep it below 140, because the fundamentals are not there for dollar yen to reverse. We are on lofty levels. It's undeniable, but give me a good reason to be long yen apart from interventions. Okay, so the market is talking about this 145 zone. It's also a bit of an extension. It's a prior, their prior bounce levels, and this is then when we got the I think that's the US CPI move, and they helped it lower, and dollar yen just collapsed that day. And it all started from this 145 again, okay? So this 145 is going to be a psychological level. It is a level where bank MOF watchers or whatever are thinking that they intervene, but that is pure speculation, pure speculation. Fact is that this is still very big and very impulsive right now. So for those who are long yen, for the time being, I can't advise much. For those who are short yen, I'd say be careful as well, because if they intervene, you could be looking at a 300 point, 400 point drop in the dollar yen as well, just because they do intervene. But yeah, my base case is that if they bring it back down to around here on interventions, it's going to be tough to stay below there, in my opinion, right now. So that for the yen side of things, just a quick one back. You see those levels here on the guppy. I think if we get down below 180.5, that could spark a bit of short-term stop losses or people just managing positions and having identified this level as well, then there is a chance of going back to 177 on interventions or so. But if we get down there, I doubt that it's going to be really crashing through unless the MOF puts more money in it than the $65 billion that they used in September, October, November. Right, that for that. What else are we looking at? Oh, CAD yen. Dollar CAD first of all. So we had this test here. Well, we didn't really manage to get down to this 138 in the dollar CAD. Then we had yesterday's Canadian CPI coming in a bit weaker than expected. Yeah, those in the chat room know that I bought a few dollars yesterday here. I've already taken just a tiny bit off, just for the gods of FX, you know, and my stop is for the time being below there. I am looking at offloading more if I get what I want to see this afternoon, because there is a case to make, as I said, for a bit lower dollar towards the end of the month. So I'm going to be looking at, if we get a spike this afternoon up into the 133s, I'll be a happy man. Canada yen, it's your same yen problem, right? I don't know if I did it on the weeklies, but you know, since we've broken above this 103 whatever, we never look back anymore. And it's the same with all those yen pairs. How hard do you want to counter trade it? I think there's perhaps a case for the Canadian dollar to be a little weaker on the Canadian CPI. But this one, for as long as you are above the prior 106.5 high, also it's been roughly the first setback, and then we're taking off again. What are you going to do? I mean, I don't know really. With the yen being what it is, if you short Canada yen, you hope for the Canadian dollar to be weak enough to bring this one down. If you're long Canada yen, then you keep an eye on 106.5. 106.5 is going to be your first port of call there. If that would go, then it's probably 104.5. Remember that we had some decent activity in the short term around 104 2040 in those days. Here it was around 104.25. That's probably going to be another level to keep an eye on. But the first one is going to be 106. What happens around 106? Call it half, three quarters here. That's the Canada yen. For the rest, why not? You know, 110.5 is a stone throw away in yen terms right now. That for that. Over to the antipodians. And that is a very different story, right? Yesterday I spoke about the 67.25.40 level on the Aussie. We didn't manage up there, and we just went shy of it. Bit of a shame because I missed that one. Met rate already back down, so big setback on the CPI. Keep an eye on what's happening. We're already below the support here around 66.5. It was around 66.65, so that's another one to watch. 66.75, that's going to be another one to watch. I don't know how end of fiscal year flows in Aussie will look like, Australia will look like, but based on equity markets, I actually would think that we should see a bit more buyers on the Aussie for the end of month, end of year over there. But I'm a bit reluctant to catch a knife here because this looks a big impulsive rejection of the high. So if Aussie would go higher, it's going to be the dollar side doing it, in my opinion. And then we are going to need to have a close look where we end up on Friday. So this is one where I rather will set my view on Friday, perhaps. But for the time being, and seeing its value date end of month, I wouldn't even be surprised if we have a look below 66 this afternoon. But let's see. Kiwi, bit of an odd one. Probably gone down in sympathy with the Aussie. The other thing I saw was that Robertson in New Zealand said that they will not put full employment on the top end of their mandates list. Perhaps that, which the government would have liked, perhaps that is part of the knock on the head of the Kiwi. For the rest, I don't see much other reasons. If anyone would have another reason, please be welcome. But fact is, we crashed through support levels here. We absolutely murdered them, and we are already back under 60, under 61. There's a bit of support around the 60.95, 61. Not knowing what's happening there, that may be a candidate if we get a deep enough push down. That may be a candidate come 4 p.m. for a bit of a counter trade, but I'm leaving that in the middle right now. I will see where we end up. That for the thing, but it has had an effect on this one. If you look at this Kiwi yen, that is one that really has rejected the channel pretty strongly of late. So despite all that yen weakness, Kiwi yen has rejected it. So we are building very, very good levels up around here on the Kiwi yen. So that may be one to keep a close eye on, around 89 up into the 89.60s. That's a longer term trend line here. Coming from, whoops, sorry. Coming from a little further away. Yeah, I'm gonna have to redo that one. I don't know where I put it. Anyway, that's fine. So we have to look at what's happening around 89 in the Kiwi, and that's one that I'm keeping an eye on. Let's keep a quick look on what's happening in the Norwegian kroner, up and down. It's really very bouncy. Well, very yo-yo, I would say. But for the time being, we are still under the trend line here. Unfortunately, oils are not supportive for the Norwegian kroner, but we need to keep an eye on what's going to happen at the end of for the end of the month, end of the week. There are calls for Noki buying, and then on Friday morning, of course, we are going to have the Norges Bank telling us how much or how little, or if not, or reverse it, they will do sell Norwegian kroner. Up to now, they've been selling Norwegian kroner for months. And that's kept also the Norwegian kroner under the cush. But if they would change something to that, then perhaps we may be in for a bit of a shocker come Friday. Also, where I think that it is possible that there should be a bit of Norwegian kroner be bought towards the end of the week. But I'm not. That is not an advice to trade. But I'm going to keep a close eye on events over there. Yeah, then dollar China, as Ryan already showed, I think we are in a bit of a resistance here. We actually tagged the prior high this morning, 725.5, 727.25 3/4. There's a bit of room to get up into the 727s, 728 perhaps. But if I see that this afternoon, if I see this spike, I'm more than likely going to take my profits and then take a breather, see what happens towards the end of the week, see what happens with the PBOC. They shyly put their fixing up above 721, but we are relatively distant from where they are now. So that is it. I'm going to leave the dollar rand for what it is. This little support line, which was broken, we've retested it in 766, but we are now roughly back into this 50-60 zone. For those really wanting to trade the rand short, it could be viewed as a false breakdown. below the prior lows, but I think it's this is one where we can be patient. For now, I'm going to be patient anyway and see what happens towards the end of the week. And if you don't have anything else, I'm going to give it back to Ryan.
Thank you very much, mate. Thank you very much. You did catch yen, didn't you?
I did.
Yeah, cool. One thing we've been talking about in the room, and it's important for anyone who's got their BDIs on intervention. I've been saying it for a couple of days now. This is a different scenario to where we were back late last year. This is much more one-sided in terms of the yen. So I'm reluctant to say that if they intervene, it's going to be the end of the story. I think it's just going to knock the yen pairs back a bit, and then they'll come back up to those highs and maybe even higher. They're going to have to either throw a lot of money at it, or they're going to have to do something like change the monetary policy, because it is a different devil this time than last time. So be aware of that. If you see intervention happening, be cautious that it's not marking a top in anything. It may do temporarily for a short term, give it a knockdown, as Kay says, 300-400 pips. Then it's important to see what happens after. If we come back up pretty quickly, we're likely to make fresh highs, break the prior highs, and then they'll be forced to come in again. It could mean that we're in for a period, if they do start intervening, a period of quite a few interventions. I think until it's really going to take a change of something on the Japanese side, I think to put a top in these yen pairs. So be careful. Don't think you see intervention, that's it, a top's in play, and we're moving thousands of pips lower, because the market fundamentals suggest that yen weakness is still to continue. So just be a bit cautious with the intervention stuff. Don't get too sucked into the fact that it may not be the end of the story. That's just what I wanted to drop into that one. I don't know if Stel or Kay's got anything to add to that.
No, I think the only thing, and it's not giving long yens hope. The only thing which we can't forget either is that the $65 billion they intervened in October, November, is not that much. They still have they have like over $1 trillion reserve. So it's not going to be a case of reserves. It's just going to be a case of how they want to manage things.
And they did in fact they did in fact get some help from the data back in that, because that's when CPI
CPI started to come down.
Big drops in CPI.
Well, that's the other thing. They did have help with the data, so perhaps they could use I don't know, data tomorrow on the European CPI side to do something. But it's all speculation, right? I mean, it's not a trading strategy.
No, if you get an intervention, you happen to be on the right side, then, as we say,
it's luck.
It
is just luck if you're on the right side of something like that.
Yeah, exactly. I mean, just quickly, last year when we were running up, I was shorting it from 143s, 144s up to 148 to 149s. We broke 150. I was getting a bit touchy. I had stops above 152, 152.25. I think I had my stops. And we got up just 151.94, 95, and then they came in, they intervened, we got the data turn. I got it back down to 147s, 146s, and I took all those offside positions off the table. The average was a bit better, and then that was a top, and it fell all the way down. So even when you do get it right, sometimes you don't catch it all and you don't get all the move. But just be careful with it. It's a very dangerous and volatile time. Anyway, enough of that. Have a great day, traders. Watch out for those clowns speaking around their fire pit or whatever they're going to be speaking around later on. Take care. Thanks to Kay, and thanks to Stel.
Thanks,
as always. And we shall see you tomorrow.
Have a good day, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.